In an email that I sent out on Monday morning or afternoon session, just definitely before the US market open, and I talk about the change of character. So this bar right here is definitely the change of character out from here. Okay, so for the past probably 3 weeks, we got a contraction of the volatility and also relatively low volume, and that's the constructive sign that the price is definitely moving up and pending a breakout to commit above. Okay, however, just as the price approaching the resistance level, volume doesn't really expanding, especially when it's attacking the resistance level. So that could really suggest that the demand is a bit exhausted, or just that we do not have the aggressive demand to come out and commit above. And suddenly, a slight increase of the supply on Friday. This bar right there, that's just slight increase. So this is not threatening at all. So just localized increase, it just push a price down, although it's just by like -1%. But compared to the past 3 weeks, okay, since 30th of June, and this is really the largest Dow bar that we have. Okay, so within the box here, this is the largest Dow bar that we have, and also the largest progress to the downside, and also the increasing of the volatility as well. So that came with a localized increase of the supply level. So all of this just points to a change. So this is just a change of the character. So although if you compare to this sort of volatility, or even here, it's nowhere close. Okay, so at best it's probably comparable to these few bars. But what we want is actually for a contraction leading to breakout, okay, rather than a failure. So in this case, this more like a failure. So compared to like breaking out to the upside, it's just fail on this bar, suddenly with an increasing of the supply and also expansion of the price spread right there. So the only constructive sign that we have at the moment is still testing the 7500 Exos line. So it is testing the support a few times. So previously here, okay, not here, this is the one interact, and demand showed up here as well. Demand show up, and this is really just the third time. And look at this time. So do we have demand show up? Yes, well, it's a bit of the demand right there, but compared to the past, so bar 1, bar 2, and bar 3. Okay, bar 3 was from last Friday. So bar 1, the demand shown up right here is quite a lot. Okay, had a dip, and this is where the buyer show up and push a price up. So that is the progress to the upside from the low. So bar 2, even just break below the previous bar, but demand also show up. So this time with even greater progress to the upside from the low. Okay, so this is volume 1, volume 2 also came with a localized increase, not by a ton, but there's definitely increase of the volume. However, battery last Friday break below 7500. This time, despite a demand tail, the demand tail right here is by far the shortest, okay, in terms of the progress to the upside from the low. Okay, that is showing that the bull is not as committed as bar 1 and bar 2. Or you can just say the bear is dominating in this bar. So what we like to conclude, if the bear is in an upper hand, taking the upper hand, then we want to see the confirmation, means that the next bar, even if it attempt to rally, so we also talk about we could probably see an attempt to rally, because usually right after this sort of the bearish bar, well, short term, like 2 bars, 3 bars, 3 sessions, this is considered as oversold. So right after the oversold and is testing a support level, it's not surprised to get a relief rally or at least an attempt to rebound from the support. So it is very important to see how does a rebound look like. And in the email, I mentioned 75.40. So how do I get this number? So let's take a look at the lower time frame. So 75.40 is just simply as the swing high level. So here it is. Okay, to be exact, might be 75.39. So I just rounded up to about 75.40. So 75.40 is the first level that it need to come in above in order to save it from this vulnerable spot to break down. So do we have that? Well, during the non-regular trading hours, the European London sessions, here we got a rejection tail showed up here, and during the market open here, this bar, even longer rejection tail. So suggesting that the price actually treating this level 75.40 as the resistance level. So that is the previous swing high level where we have the supply show up. Look at this demand tail. So very long, sorry, the rejection tail. So long rejection tail despite the green volume show up. But a lot of the selling shown up at this point and then all the way down. So that's why it makes sense for the price to have a pullback or retreat from this level. So indeed, the price respect the level, rejection tail showed up here, close at the low, and then have another rally and breakdown as well. So today we have another attempt to rally during the Asian European London sessions, and then holding up the gain right there. But this round didn't even bother to test the 75.40 during the non-regular trading hours. So suggesting that bear is still dominating at the moment. So bear is still taking an upper hand. So in order to violate the bearish scenario, means a breakdown of 7500, it definitely need to come in above 75.40 and then to rally up further. Then it will save it temporarily. However, if it just even fail to reach 75.40, can't even test it, touch it, then chances are S&P 500 is likely going to go down, break down 7,500, and to go down to test the next few levels. So we still have two more levels to be exact. So that's still stuck within the trading range. So this is just like a minor level inside this trading range. So the trading range from 7,300 all the way to about 7,600 or 7,640. So this is like in the middle of the trading range. If it breaks down, fail to commit above 75.40 and then break below the previous low, so we could probably extend it to the low on Fridays. So 75, then if it breaks down from here, then it's likely going to have a flush at least to 7,400. So this is where we have the previous demand show up right here, and let's see how it actually interact at 7,400. So if suddenly there's a ton of the panic sets in, it's likely going to test 7,300. So by the way, 7,300 is the meaningful support level, and I'm not that bearish like to change it to a distribution structure, even if it go all the way back to 7,300. So if you look at the long-term time frame, so we have already zoomed out. Here is a low form in April, and we have a very strong rally, even going to, I think that's the steepest run in the history within a very short period of time. And then a change of character, higher low, VCP, volatility, contraction pattern, a failure bar. So this is where things started to change since last Friday. So I switching my bias to the downside short term, at least to this swing. So if it breaks down, breaks below, then it's likely going to test 7400 followed by 7300. So medium term is still stuck within the trading range from 73 to about 7640. So you could do something like this to have a prolonged trading range while the rotation is ongoing. So it's very important to see which groups actually buck the trend or which group actually leads the way out, because the previous leaders, for example, the AI infrastructure, the memory, and the CPU, the GPU, and also the connectors, networks. So everything that's made up of the AI infrastructure, by the way, is highly in demand and is nowhere ending anytime soon. But in the stock market, the price actually ran up too fast. So a lot of the profit taking activity or even distribution happened. So a ton of the stocks just drop 30%, 40%, 50%, or even more than 50% in just a short period of time since probably May or June. I think the topping probably started in June until now. Then they've been falling for 30%, 50%, even 60%. So fundamentally, might not have any change yet, okay, at least from the headline, from the news. And for the price, there's a big drop, a huge drop. However, only a few groups they're still bucking the trend and also show relative strength, which will definitely look into the setups, the details of those groups. Okay, so short-term wise, I do think that the trend is likely going to go down. The swing is likely to go down. If it breaks down, breaks below this swing low, 70, 74, 75. Okay, let's just round it up to about 7,500. So if it breaks down here and also breaks below here, it's likely going to go down. The key level that you need to commit in order to save this downswing bias is 7540. So that is the first level that you need to commit above in order to save itself from this vulnerable spots. Otherwise, it's more likely to go down, break down, and to test next few levels 7400 followed by 7300.